Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with the breakdown of the action in today's session. And Ed, we did not start off 2023 on a high note with a downside reversal, weak action that we saw today.
Weak action, resistance. We'll get into all that. I want to take a look at a couple stocks that held up pretty well, Eli Lilly and Caterpillar, and then another stock, Mobileye, not so much.
Okay, we will get to those stocks, but first look at the major indexes today. The NASDAQ down 0.75%, taking the hardest hit here, followed by the Russell 2000 down 0.5%. The S&P 500 off 0.4% today, and the Dow weathering the storm the best today, down just fractionally by sessions closed, but still that resistance. So let's get into the technicals here, Ed, starting with the NASDAQ.
Yeah, the NASDAQ had the worst day, and even then it did come off lows, but this one probably had the least resistance because it got near the 21 day and then just headed lower. Basically, we were up for about 12 minutes and then we started heading lower. I mean, it was as much as that. And well, we came off those lows, so that didn't last long. So that was our big 2023 rally so far.
Exactly. Yeah. Closing right around 10,400. Now taking a look at the S&P here, resistance right at that 21 day, which is now back below the 50-day line.
Yeah, so there's that, and again, not too far from the 50 days. So right at the start, some positive things, and this was triggering also some positive action, some stocks. So that's why makes it so tricky. It's not like this action you go, wow, what a wild, crazy day, but there were some stocks that were moving out, and then bam, immediately getting reversed lower.
Yes. All right. And let's also take a look at the Dow. This is your DJIA on MarketSmith. Resistance at some converging moving averages here, the 21-day and the 50-day line. And also we've seen a bit of a trading range now forming for the indexes, and all of them getting turned away right around the highs of this trading range. I guess maybe that could be another scenario setting up here. If we form another trading range, breaking below it or above it potentially could be a tell.
Yeah, I mean, this is interesting. Definitely the Dow seems to be the clearest with those major indexes coming right there. But I think it'll be interesting. Catalyst would be Friday with the jobs report. That could be, I mean, maybe not, or maybe it'll be a head fake and it'll plunge and then reverse higher, or do the opposite. Yeah, market doesn't know where it wants to go. There's a lot of uncertainty, so it's not really that surprising that we're going sideways. But I think people need to realize we are not in an uptrend, so we shouldn't be acting like it's an uptrend, and you shouldn't be using bull market rules out there. It's a choppy market rally attempt at best, and really we've had one day in the past week or so that was up.
Yeah, exactly. Choppy at best. Okay, and the Russell 2000, here's IWM coming right up to its 21-day line, also getting turned away, also still kind of around those recent lows here. Ed, any thoughts on small caps at this time?
Yeah, small caps, well, it's just like they've been disappointing, certainly, from late November into December, and, hitting resistance here too. And just we're not seeing any real strength in the market.
We're not. And the 10-year Treasury yield down today, but off its lows right around the 50-day line here for that, still below the 4% mark. What do you make of where we're at on the interest rate front?
I think we need to see how it's a combination of they're worried about inflation and recession. So I think the bond market's just as puzzled as the stock market. And look, if we can get some tamer inflation and employment news, then the Fed can slow down. Inflation becomes less of a concern. Recession becomes less of a concern. But the bond market had a really terrible year last year as well, as yields skyrocketed. So if you owned bonds, those prices tumbled. Yeah, as you can see, TLT on the 20-year bond measurement, basically, really a bad time. So it'd be nice to end that, but it doesn't mean that we're going to end it anytime soon.
Mm-hmm. And in terms of sectors, let's take a look at energy because it was the first week of January in 2022 that we saw this group really catch fire. Well, where does it stand now? Bleeding a lot today to kick off the year, down at 3.6%, still holding above its recent lows. But Ed, this group is not looking as great as it once was. Here's that first week of January 1 year ago.
Yeah, that was a different story. I mean, energy was the big winner in 2022. Didn't end necessarily great, but yeah, oil was down 4% today. Natural gas, which has just in free fall, was down 11% today. It's just really hard to get energy stocks to rise when energy prices are tumbling.
Yeah, and I know underneath the surface there were some transport pipeline related stocks that on ABD Live you guys were commenting how they were really taking some big hits today.
Yeah.
And let's also check in on XLV, the healthcare sector, down fractionally today, about 0.25%, holding its 50-day line. So a potential setup here, Ed, although not clear cut, ahead of what could be a big week for the healthcare sector next week with the JP Morgan conference.
Yeah, JP Morgan conference, and we're going to be getting into earnings season pretty soon with some of those names. You can see the 50-day line, 21-day line situation squeezing in there as well. And health insurers had a pretty lousy day today, so there was other names in there, but healthcare defensive growth still in general seems like a pretty smart strategy, in the current environment.
Something we'll be watching very closely as the year progresses. And let's also take a look at SMH chip stocks, down, but not as bad as energy, I guess, if you want to take the cup half full view here.
Yeah, I mean, it was doing, it wasn't a terrible loss, but again, a reversal. We were getting up to the 50-day, 21-day line. Again, chips, it's a good chance that if the S&P 500 moves above the 50-day line, that chips are going to be sort of helping along the way. And so seeing the chips still struggle below that level, and of course the 200-day line and the December highs, lots of resistance levels for the chips for the market.
And since I mentioned the JP Morgan conference next week, I might as well mention the big conference that's happening this week, and that is CES, primarily focused on technology companies. But Ed, as we know, every company is kind of a technology company nowadays. So that all of the big names are going to be at CES this week. IBD is going to be covering that event. We're going to be speaking with some chip companies. We've got AMD, Mobileye, Qualcomm, and onsemi on tap. We'll also be speaking with Caterpillar and Deere and a lot more. So those are just some of the highlights that the audience can expect from us as we travel to CES in Las Vegas starting later this week. And moving on.
Looking forward to it. Yeah.
Good.
Those are some great companies.
I know. I'm really looking forward to it as well. We are going definitely with the goal of getting some really great insights for our audience to kick off the year strong and help us as investors really navigate this landscape. We're at a very interesting juncture right now, so it'll be interesting to see what these companies have to say. All right, well, moving on, let's take a look at Eli Lilly. This is ticker LLY. A pretty calm looking chart here, Ed, and pretty resilient, I would say.
Yeah, trading very tightly on a daily basis, so on a weekly basis. It's been finding support around the 21-day line, the 10-week line. It basically is. Yeah. Well, it looks like it's going to form another flat base at the end of this week. And as we say, there's a triangle coming. So it's all there, and so it's there's not a pressing need to jump into this stock because the market, it could still come off, or there could always be bad news. But there's a lot of optimism about the future, about obesity drug and some Alzheimer drug perhaps, and it's just trading so tightly and calmly in this market, and the relative strength line is right at highs. So a lot of reasons why people should be looking at this one.
Yeah, that defensive growth, as you said, we are seeing that look of volatility, contraction. So the trading ranges getting narrower and narrower right at that key 10-week line. I think the interesting thing here, Ed, would be this is a stock that likes to form bases as it's moved up. It's forming another one right now, but it's touched, close to that 40-week line a number of times too along its run. So at this time, when we see, a 10% plus difference between where it is and where that 40-week line is, does it need more of a pause? Does it need more of a break? Or can it really blast higher from here in this super bullish pattern?
Yeah, that
That's
is a
the
good point.
question.
I hadn't really thought about it because I've been noticing how it generally been tracking the 10-week line. I mean, not always holding it, sort of like going around it. Obviously, the market is off lows, especially the S&P. I mean, the Nasdaq's dragging things down, so there is some separation, from the lows. So it's maybe it's a little understandable, but there's nothing wrong with a little more sideways action, letting that catch up a little bit more.
We'll have to see, but a compelling setup, no doubt. Next on our list, speaking of Caterpillar, let's go there. So the machinery and mining construction company. Let's see how it's looking on a daily chart. Pretty quiet start to the year. This 240 level, Ed, looks to me like it's setting up to be the key area for this stock to get above.
Yeah, I mean, the buy point is right around there, and it's got this little base right next to a bigger base, which is not unusual at all. Bullish action, the relative strength line moving up, tight action. It's basically found support of the 21-day line on a daily and the 10-week line on a weekly. So the 50, even the 50-day line, which isn't as close as the 10-week line, that's caught up a lot, because when this moved out to 239.85, it was really extended from the 50-day line, and obviously. And so but it held so tightly. This base is only 6% deep. That is really tight.
Yeah.
Market action out there, so that's a positive sign. Again, this one hasn't really moved out, but I think it's one to watch because it's almost like if the market could just show just even just a modest incline, this might do quite well.
One to watch for sure. And let's also take a look at Mobileye. We'll be speaking with them at CES as well. This is not the kind of reversal that we like to see. We like to see reversals to the upside, not reversals to the downside. And this one coming off almost 7% here today, Ed.
Yeah. I mean, it's like you don't need LiDAR to see this to see this reversal. It did have that upside reversal on Thursday, so it's not surprising to see outside moves on a new IPO. So it's not like crazy, but here it is. It just is rebounding from the 21-day line. Today, it clearly was breaking through a trend line. It was getting extended from the 21-day, but anybody who bought near the open, could be down 10%.
Yeah.
I mean, it's like that. I mean, so the indexes, they were down a fraction, down, 0.7, 0.8% is the worst. And yet really there were some stocks that had some big losses out there. It just makes it so tricky. And this is the kind of move that might have worked in a better market. But in this kind of market, it's just so difficult to trade anything because they can be prone to reversals, or even if they go up for a day or two, then they roll over and wipe out the gains.
Well said there, Ed. All right, well, that's it for today's show. If you are a Leaderboard subscriber or trialist, make sure you go to leaderboard.investors.com. In 5 minutes, our Leaderboard Scorecard webinar will commence. So we hope to see you there to talk about performance for the month of December, what the team's got going on in terms of its watch list strategies that we are looking to use this year in 2023. So join us at leaderboard.investors.com and click the link in the top banner. Thanks for tuning in, everyone. I am going to be in Vegas for the rest of the week, but you are in great hands with Ed and Justin. See you later, everyone.